Oh, this is ridiculous. Every day I sit here in these horrendous traffic jams. I pay an awful lot of money in tax every year. How is there never enough left to fix up the roads and give us some decent public transport? What do they do with all that tax money? I know I pay my fair share.
People like Leslie do not need to pay more tax in order to fund essential services. We can greatly increase the amount of revenue that government receives by closing loopholes and subsidies that benefit big business. Professor Rick Krever explains.
Australia's corporate tax rate is presently set at 30%. However, as Treasury figures show, very few companies pay anywhere near this rate. In fact, in the most recent year, for which all returns have been filed, almost 3/4 of corporate taxpayers paid less than 15%. How is this possible? The Australian government loses this tax revenue due to a complicated system of tax concessions that can bring the effective rate of tax paid by companies down to almost zero. There are, for example, exemptions for Australian companies running operations in tax havens, research and development subsidies, subsidies to breed racehorses, subsidies to buy company jets, subsidies to the oil and gas and mining sectors. The list of corporate welfare tax subsidies published annually by Treasury goes on and on. Who benefits from these tax concessions? The company's shareholders and investors. The question is, do companies need all these concessions, or could the money be better spent providing essential services for the benefit of all Australians?
A lot of people say that all the countries in Asia and Europe are cutting their company tax rate, so businesses invest in those countries. If Australia doesn't lower their corporate rate, then those businesses will invest overseas. I could lose my job if they did.
It's not true. Australia will attract foreign investment regardless of the company tax rate. Australia has an abundance of natural resources, and this attracts most overseas investment in Australia. The world wants Australia's minerals, and investors will come to where the resources are. The tax rate is irrelevant to these investors. It is similarly irrelevant to overseas companies wanting to reach local consumers of products and services. In recent times, foreign companies have invested in supermarkets, transportation and logistics firms, airlines, department stores, and many more enterprises in Australia. Australia's tax rate was not a consideration for them. They wanted access to a sophisticated market and were more than willing to pay taxes as a cost of obtaining that access. Foreign companies also invest in Australia because of our technical expertise and infrastructure, which may not be available in other countries. Overseas companies will continue to invest in Australia with the current corporate tax rate. In fact, our current tax levels may attract foreign investors as they can access an educated and healthy workforce, social and political stability, cleaner government with safeguards against corruption, transparent company law and competition law, and effective transport and communications infrastructure across the nation, all accomplished with the help of government programs and tax dollars. A cut in the corporate tax rate will result in funds being lost that could be used for the benefit of all Australians.